Welcome to my review of my Trading 212 portfolio. It's been a really interesting time over the last month, and we'll jump in and have a quick look and see what's been going on in the market. So first of all, looking at the FTSE 100 over the last month, it's just about up about 0.18%. If we then have a look at what's been going on over the last week, you will see that we are down by just over 2%. But what does it look like when we jump across and look at the US and the S&P 500? So over the last month, it is up pretty well, up over 4%, but it's down almost that amount over the last 5 days. What's caused all of this furore within the markets and the ups and downs? And actually, all this is normal background noise, nothing to get that worried about. Hopefully. We've just had mixed job reports from the US in the last few days. We ended up having lower jobs being added. Analysts had thought it was going to be about 160k. It came in at about 142k for August. But if we have a look at the unemployment rate, that's fallen back to 4.2 from 4.3%. We've also got bouncing around in the background. The Fed are potentially going to do a bit of a rate cut in the next few weeks. So looking at that time period of the 17th, 18th of September, and everybody is focusing on that cooling labour market. And I think everybody's already baked in potentially a 0.25% cut in the base rate. Welcome back to the channel, and if you're new here, hi, I'm Mark from Desperately Seeking Fi. So is this all doom and gloom? Or if we have a quick look at this chart, you will see that this is reasonably normal on average for September. And I suppose if you then jump in and have a look at this, September is the only month where we see across lots of the US indices, you see that it's down across everything, with the Dow Jones being down on average 1.1% and the S&P 500 minus 1.2%, and even the Nasdaq down 0.9 and the Russell 2000, so those smaller companies, down by 0.6%. And I suppose, why does this potentially happen? One of the theories is that you've had everybody who's been not doing very much while they've been taking in their summer holidays and vacations over July and August, and then people come back and there's a bit of a frenzy and everybody starts doing things. Let's jump across and have a quick look at what's been going on in the portfolio. So as you know, Trading 212 is my preferred platform for my stocks and shares ISA. If you want to grab a free share, you just use my link down below or use my code of DSFI if you've already opened up an account and you haven't got one of those free shares in the last number of days. There are terms and conditions to that. Let's have a quick look at Trading 212. You will see over the last month, if we just have a quick look at that chart, you'll see that it's been a little bit choppy, and you will see that there are drops and bumps and peaks and all the rest of it. That's just normal noise. What have I got in here? So I've obviously got just under 42,000 in the portfolio. I've got a little bit reserved for orders and holding a bit of free cash in there. I'm not going to do everything that I have in here, but if we have a quick look through, you will see a lot more red in here than I had in my previous portfolio review. Let's have a quick look at some of the things that I have been investing into. First thing that I had bought in August was Evolution Gaming. This one over the last month is up about 5%, but you can see that it's gone up and it's come back down again. I'm holding about 9.5 shares of that. FX is hitting me a little bit, and on top of the loss that I'm on, so currently down about 15.5%. It is dividend yield of 2.91%. So that's the first one that I bought, and I bought about 2.5 shares of that back at the start of August. Next one that I've been adding to is ASML, and you will have seen that it has taken a bit of a battering in the last month with that drop off. But if we have a look at what's been going on in the sort of wider AI space, you've had several others also taking a bit of a hit, and that includes Nvidia and AMD taking a hit over the last few weeks. I'm just continuing to buy into this a little bit, and over the last month I've added at the start of the month 0.2 of a share, and then another 0.15, and I've actually bought a little bit more also in September as well to add to that. Once again, I'm at a loss and down about 13% on this one. With my dividends that I got from last month, I basically ploughed them back into Legal & General, and I think Legal & General is now my second largest holding within this stock portfolio. Currently, I am actually in the green and up 1.1%. And if we have a quick look at the stats here, we are sort of trading within sort of that middle range of the 52-week range, and still getting a pretty nice dividend yield of 9.2%. There's a question that somebody asked, if you were, I think it was actually FTSE Dividend on Instagram, go and check him out, but he asked the question, if you could only invest in one single FTSE stock, which one would it be? And I actually plonked for Legal & General. I think there is still some growth potential in there, and it does pay a pretty stellar dividend. But go away, do your own research, because that could potentially be a dividend trap with that larger than normal dividend being paid. Next thing that I've been investing into, and I'm going to start building up my position that I hold within the JP Morgan Global Growth and Income Fund. I initially last month sort of started to build into that, and I bought 100 shares, and I've actually, as you'll see, that I've actually added a little bit at the start of September as well, sort of bringing me up to 175 shares. Currently down 3.42%. I'm just going to continue to sort of keep buying into that and building that position up, and this will probably become one of my larger positions, because I will potentially look at trimming a few others. And it did go ex-dividend on the 29th of August, and that was with it paying a 3.54% dividend yield. Next stock that I have added to the portfolios, this goes into the house builder pie that I've built. I will drop a link down to that down below. This is a pie that I have built over the last month or so. I've used Stockopedia as my go-to stock research tool. I put in a few parameters. I was looking at sort of companies over that £250 million mark, looking at quality and momentum on these companies, so that I was buying good quality companies but also that were showing growth, and basically that came up with a set of companies that I now hold within this pie. And if you want to see the pie, I will link it down below, and also if you want to go and have a look at Stockopedia, I will stick my affiliate link down below, and if you want to go away and have a look at it, you will get 25% off the Stockopedia products. What I ended up adding was Vistry Group, and I've added the 10 shares of that, and that is almost 4% up over the last month. This one pays a dividend of 4.03%. And then next one that I've added to is Genuit, and this once again is in that house builder pie. They are looking at manufacturing and sells water, climate and ventilation management systems, both in the UK and the rest of Europe, and a little bit internationally as well. So looking at diversifying just beyond actual house builders that build houses within the UK, looking at some of these companies that will end up playing a part in the manufacture of and the wider house building supply chain. It once again went ex-dividend on the 29th of August, and it is paying a 2.7% dividend. This is where it starts getting quite interesting within the portfolio, because within this house builder pie I used to have a couple of other companies in here. And first of all, there was Timon. This basically got purchased or so Connex ended up going through an acquisition of Timins, and on the 2nd of August that all went through. I've received some money for the 49 shares that I held of Timins, and I've also got a compensation from Connex as well. So I've got a number of shares that have actually come through, and looking at that over the last month, they are up by 10%. Don't know whether that is because of this acquisition or not. On the 23rd of August, yet another acquisition take place, and this is Redrow, one of the building companies in the UK, has been bought over by Barratt Developments, and this basically just went for a straight swap. So I had the value of the shares within Redrow just got transferred into Barratt shares, which is why when I look at Barratt Developments, it looks like I'm up almost 100%. That isn't quite the case, because that is just that they transferred the holdings from Redrow across into Barratt's. Over the last month, this is down 5.45%. Wait and see where Barratt's and some of these other house builders get to as the new Labour government look to drive forward that whole house building agenda with the huge number of houses that they are looking to build over the next 5 years. Barratt pays me a 5.5% dividend yield. Then my first sale of the month was the FTSE Vanguard 250 distributing ETF. So this is VMID. Had been planning to sell this once it got up close to that £33 mark, and actually I did. I managed to sell this at 32.75 per share, and there were 50 shares in there. So that is basically all the money that is sat in my unallocated funds at the moment. Looking at where that chart is over the last month, that looks like it was a reasonably good idea. I could potentially come back in and buy in at a much lower price, but I think I'm going to look for other things. And as I said, JGGI, that JP Morgan Global Growth and Income Fund, is something that I'm probably more interested in investing into. I'm going to do a video on that in the very near future to sort of talk through some of the reasons why I have quite a bit of conviction in that fund. So that is basically everything that's been going on within the portfolio. I do have quite a lot of my emergency funds sat in the cash ISA on Trading 212. They were paying 5.2%, and that is tax-free. That's all locked in to the account. What is going to happen on the 9th of September, we will see that reduce from the 5.2% down to 5%. So not as good as it used to be, but about as good as it gets on the market at the moment. So I'm just going to keep holding money in there, and you will see every single day I'm just making about £1.45 per day in the interest from money just sat in that cash ISA. Once again, if you haven't taken advantage of Trading 212 yet, I'll drop a link down below where if you follow all the requirements, you get yourself a free fractional share of up to £100 for just sticking in £1. Just check with the terms and conditions and see whether that's something that you're interested in. So why don't you go and have a quick look at this video that talks about lots of different ETFs that you could invest into if it isn't individual stocks that is your thing. Thanks very much for watching, and I will see you in the next one. Cheers, bye.